Hello everyone and welcome back to another episode of Coffee and Crypto. It's been a while since I have been on and seen you all, so hopefully it's a smooth and easy episode, but I'll just wait for the notification because these are recorded live for anyone that didn't know. We do record them live and post them on the page for anyone who didn't catch them to watch back. So yeah, anyway, live stream is back with me, Don, and I'm going to cover off some the prices, should I say, and then also some news articles and some things that I am liking the look of, but also some things that I'm not liking the look of for the next kind of few months as such. So, first things first, like I said, let's look at the prices of the market just now. I'm going to quickly refresh this and have a look. So Bitcoin currently trading at $57,920. Oh, it just changed. $936. Ethereum's at $2,456. We then have BNB, $524, with Solana holding above $100, so it's $130 at the moment. Something I want to touch on at some point over the next few weeks is Solana. We then have XRP at 55 cents, Dogecoin at 0.9, then Tron at 15 cents, and lastly we have Toncoin in 10th place at $4.96. So what's going on in crypto? Well, not a hell of a lot, to be honest. It is September. There is a part of this video will be focused around September and how potentially rubbish it's going to be depending on how you look at it, but also how positive it's going to be, again, depending on how you look at it. For me, it's a positive month, a good month for potentially buying if you are that way inclined, but nonetheless, it's an exciting month for me personally, and I do have a lot of plans over the next few weeks, and so do we here at Certified Crypto, so yes, stay tuned for that, and all will be revealed very soon. Okay, so a few news articles I want to cover off, like we used to always do in Coffee and Crypto, just to cover off what's going on in the world. Does it make much of a difference to you? Should you care? Well, let me read and you can decide that for yourself. Now, first of all, I want to talk about Qatar and then I want to talk about the UK. A little bit of a comparison, I suppose. We'll start off with Qatar. So Qatar introduces a regulatory framework for digital assets. The Qatar Financial Centre, as a business centre based in Doha, Qatar, has released a comprehensive regime for regulating and creating digital assets. The QFC's regulators, which is the Qatar Financial Centre Authority, and Qatar Financial Centre Regulatory Authority, wow, that's a lot of words to try and say, announced a framework that establishes a foundation for digital assets in the QFC. The rules include tokenization processes and legal recognition of property rights in tokens and underlying assets, as well as custody arrangements, transfer and exchange. Now, in addition to all of that, the framework has provisions for the legal recognition of smart contracts. So, again, everyone should know this, but smart contracts are extremely important in crypto, and it's a great way for, things to just get done without real human interaction, because we all know things tend to go wrong when humans get involved, but when smart contracts are involved, there is no real middleman as such. It's, you should get paid this amount of crypto on this day for this reason, boom, it's done. So you have seen quite a lot of like airdrops or kind of seed rounds and stuff like that using smart contracts. It's just it's a sure-proof way of making sure you get all the crypto you're supposed to get and getting it on time without, like I said, relying on any third party, i.e. a human. Now, like the free economic zones in the United Arab Emirates, which operate independently from the mainland, the QFC has its own legal, regulatory, tax and business framework separate from the rest of Qatar. Now, the QFC allows up to 100% foreign ownership, which is important for anyone living outside, and 100% repartition. That's going to be back to my old ways where I don't pronounce words properly. Correct me in the comments on that, please. Of profits. It also charges a competitive rate of 10% corporation tax on locally sourced profits. So, you probably understand why I'm starting to cover this article on Qatar before I cover the UK information. It's not quite the same, but it's just to show you the differences between kind of our side of the country, being in the UK, and then over in the kind of Emirates side of the world, just how different, completely different, the two worlds are when it comes to crypto. Now, according to the announcement then, the framework will ensure that the digital asset ecosystem within the QFC is secure and transparent, and it also adheres to international standards. So again, it's all important because this is all completely new, technically, to that side of the world, including United Arab Emirates, as well as Qatar. So it's all quote-unquote new, so there is a lot of questions that will be asked and a lot of transparency that needs to be given, and yeah, they're basically just making it very clear that that's what they plan to do. So yeah, another great leap for the Emirates side of the world, and I can't speak for the UK, but it's definitely not as good and as smooth as that. Anyway, with that being said, let's move on to the article I wanted to cover regarding the UK, because this is something everyone watching will have had an issue with at some point in the UK over the past, what month are we in now? September. So over the past kind of 9 months, there would have been something that has came up around this, maybe even the last kind of 12 months. But anyway, the article reads, crypto platform resumes UK registrations after a 10-month FCA compliance pause. So you remember Swissborg had this quite recently, but most, if not all, of the big crypto platforms had this issue, should we say, or question marks put in place. Within the UK, a lot of them actually left, i.e. Bybit. You remember Bybit left probably about a year ago. Not ideal, but I believe they will come back at some point. There was just a lot of hurdles for them to jump over, and clearly they didn't want to do that. But anyway, Nexo is resuming new user registrations in the United Kingdom after a 10-month pause in the onboarding process. The crypto lending platform implemented multiple key updates in response to the regulatory guidelines set by the FCA, according to its announcement shared with Cointelegraph. So Nexo is not something that I ever used, but it was quite a large platform. Nexo's new onboarding flow is more aligned with the FCA's guidelines, primarily aimed towards improving investor protection via risk awareness, according to a Nexo spokesperson. So it's all the same old jargon, it's all the same old nonsense, should I say, that has been hit, well, I suppose since day one, but from the FCA when it comes to crypto. So a spokesperson here for Nexo has mentioned that it's designed to ensure that users fully understand the risks associated with cryptocurrencies and the products that we offer before engaging with our platform. This includes a mandatory, detailed risk warning that users must read. I don't think anyone will read it. A cool-off period, and then FCA-aligned assessment. So, don't get me wrong, I think Swissborg still shows on the app that there's something at the very top talking about how risky crypto is and whatever. That's a good thing, I guess, because it gets them round the compliance part. Do you read it every single time? Probably read it, but do you take it in and do you care? Probably not, because everyone knows, or they should know by now, that the risks that are involved in crypto, again, you watching this well know that there's risks involved, and if you don't know, please go investigate and look into crypto and the legalities behind it, because it's very, very risky. But everyone already knows this, but a lot of these platforms are having to just kind of tick box with the FCA, pay them a lot of money for consultants and whatnot. Essentially, it's a way for the FCA to make more money, but also have users' funds at heart. But ultimately, it is up to the end user to read and understand them and then act on it accordingly. But I'm pretty sure 99% of people that read it probably don't really take it in as well as they should. But the main thing is it's there to protect investors, and that's what we need to kind of go with at the moment. So Nexo halted new user registrations in the UK December 2023 to implement the aforementioned regulatory upgrades and become more compliant with the FCA. Nexo started phasing out some of its UK services back in October of 2023 in response to a regulatory change from the FCA. Nexo halted cashback payouts for Nexo Exchange and Nexo Card, and also halting referral and affiliate programs. Other notable companies like PayPal and I've mentioned already, Bybit, also phased out some of the crypto-specific offerings during the same period. PayPal suspended crypto sales for the UK users for 3 months, while Bybit halted crypto services in the UK completely, and they haven't really gotten back since then. So yeah, it would be good if they could, because Bybit is a huge platform and was fairly straightforward to use. It was a good all-round platform that I use, and I know many of you would have used it as well. But yeah, it kind of lost out by leaving the UK, but they're not daft. They will be back, I'm sure, because there's a lot of money left on the table. But anyway, as I mentioned, I wanted to try and kind of compare Qatar to the UK. Quite simply, I think I've done that already without kind of mentioning it. But yeah, it just goes to show you that all these compliance issues and whatnot, 10 months worth. Yeah, in Qatar, they're essentially approving everything and, you know, being very transparent with it and kind of moving forward and pushing to go forward. Whereas the UK are a bit more kind of archaic with their moves. Now, the next piece of news is just regarding gold. Obviously, we talk about gold quite a lot. So central banks are buying gold at record levels, but Bitcoin is still outperforming. So again, that's not really news, I suppose. It's always been a thing, but the fact is they've ramped up their buying recently for whatever reason that may be. Gold is a secure, safe asset, I guess, but also maybe they don't have the capability or the trust yet in buying Bitcoin, but who knows, maybe that day will come for some of these big banks. Now, central banks across the globe have been stocking up their gold reserves at record levels in 2024 in a pivot to store of value assets. So, in September 2nd, so what was that, yesterday, a newsletter reported that global net gold purchases by central banks reached 483 tonnes in the first half of 2024. That's the most they've ever had on record. So it added that the figure is 5% higher than the previous record of 460 tonnes, which was set in the first half of 2023. In the second quarter of 2024, central banks bought 183 tonnes of gold, making a 6% increase over the year. So the likes of the National Bank of Poland, the Reserve Bank of India, and the Central Bank of Turkey were the largest central bank buyers of precious metals during that period, which is interesting because, as we know, Turkey doesn't have it's a pretty inflated country, unfortunately. Hasn't got a great currency kind of system, but maybe that's why they're stocking up on gold. Maybe they have plans, or maybe they just have to ensure they don't crash into oblivion. In late August, it was reported that the president of the National Bank of Poland, Adam Galimski, revealed that the bank would continue to buy gold as it aimed for it to compromise 20% of its reserves. So again, very smart move, obviously, because gold it's always been there, it always will be there. Do I believe it's the kind of investment of the future? Obviously not. Bitcoin would take that place, but for now, in 2024, we're still seeing gold take a kind of main stage, should we say, from banks, and it's not the worst thing, to be honest, because they need to cover themselves somehow, and gold has always been that sort of value for, a long, long time. Anyway, that was all I wanted to kind of cover on central banks buying gold at record levels. Are you buying gold? Let me know in the comments below if you're a gold buyer, a silver buyer, or any kind of precious metals, because obviously we like to diversify. We don't always, or only, should I say, invest in a digital asset. It's also good to have physical gold as well as a kind of reserve of your wealth, should we say. So yeah, let me know in the comments below if you also invest in gold. Now, moving on to, I would say, the best part. But in all seriousness, it's a quite important part of the video. For people that have followed Coffee and Crypto for well over a year now since it started, yes, took a bit of a break, but we are back, or I am back, should we say. Deck has been doing a few episodes here and there, but I do plan to come back with a vengeance and bring these back multiple times per week because, look, the market is starting to heat up again, or will be in the next month or so, which I'm going to explain to you in just a sec. So it's important that we start putting content back out when people need it. And I do believe now is the time for crypto to really start kind of getting interesting again. It's been, I don't even want to use bad words. It's been diabolical. Is that the word? In a sense, look, it's been expected. The summer months are quite boring. They are just a bit wishy-washy. Up, down, sideways, boring, a little scare here and there. It's the same old kind of market conditions. It's just went on a little bit longer, should we say, than normal. So it has definitely not helped certain people's kind of mindsets and whatnot. But anyway, we move forward. Like I said, September, it's time to get interested again in crypto, in my opinion, because quarter four, i.e. October, is, on paper, it's always proved to be a good, substantial green month. So, this chart in front of you, I did cover this about a year ago. Obviously, it's a different chart because timings were different. However, this is just information on the Bitcoin monthly returns table since 2010. We don't need to go back that far, but it is interesting to see, every kind of month since then. So there's a lot of data here. We don't need to look at it all, like I said, but the main thing I wanted to mention was, obviously, we're in the month of September. It is the 3rd of September. Now, if you look, based on history, other than 2023, for the past 6 years, we have had red in the market. Prior to that, 2016 and 2015 we had a green September, but that was a long time ago, almost 10 years ago. So based on the previous kind of 6-7 years, we have seen a bit of a red, well, I say a bit of quite substantial red month of September. However, why is that a good thing? Depending on how you look at it. I look at it in a positive look, obviously, because what happens next month? Well, we tend to see, based on average, out of how many years is that? 14 years, we see the majority being in the green, especially in October 2023. Again, everyone who has followed us for many years will remember how pinpoint it was back last year. I think it was like the 1st or 2nd day of October. Things just went wild. And yeah, I do expect that again this year. Don't quote me, do your own research, not financial advice, blah, blah, blah. However, I like to just base things on what I've seen before, what I can expect, and my opinion as well. So, yes, September, it's the 3rd of September. So far, it's posting, I think this was posted a couple of days ago, September 1st. It may have changed slightly because the market has creeped up just a little bit in the past past 24 hours. But we have started the month in a red percentage. We are very early, but I do suspect this will finish the month, and I do suspect some volatility to come over the next few weeks throughout September. However, October's looking good. Again, based on what I've seen before and based on what I'd like to see from the market. Obviously, I can't read or can't predict it. It's all a bit of a kind of best guess, shall we say. But like I said, the facts are there, the information's there, the percentages are there, that in October we do tend to have a very green month. Now, we will probably return to this exact tweet, I suppose, or this exact table quite regularly throughout the month of September, because I do expect a lot of people's minds will maybe get the better of them as we progress through, and like I said, maybe see some down prices or just a bit more volatility. So I will come back and talk about this exact chart probably quite a few times, maybe try and get an updated one as we go through the month of September. But yeah, anyway, the main kind of concern here is September and October. I suppose November, December are looking good as well, but let's just focus on the fact that it could be, or it should be, hopefully, based on what kind of we've seen before, a green month of October. Now, last couple things, I've just found this X page and I absolutely love it. So this is Bitcoin price history with the halvings, the highs and the lows, based on, well, all the halvings that we've had. So for anyone that's been on any of our courses, you'll recognise something like this that we speak about quite in depth about the halvings. But this is just an interesting look at what Bitcoin has done the past, 15 years, I guess this chart runs for, almost 14 years. The highs, the lows, and how the market's really just performed. Or I say the market, Bitcoin, but that usually speaks for the market. How the market has performed over kind of the halving period. So again, look, even just dating it back, quickly run it through. First halving, we've seen it at $12, and then a local high of $1,200, dipping back to $150. Then again, halving comes, $600 up to the all-time high back in 2017 of almost 20,000. Lows of 3,000 back to the famous, I say famous because we came onto the crypto scene online in 2020, and it was just before, well, it was probably about here, early on in 2020. So this is the halving that many of you will remember if you've followed us for that long. But yeah, anyway, $8,500 in March-ish time, April time, 2020. Then we obviously seen the high of 69,000, then the lows of 15,000, then the highs of 63,000, and yeah, obviously we've seen multiple numbers in between that, but just based on the halvings, you see, well, it's quite obvious what you see here, a higher low, a higher low, a higher low, but usually after a halving we do see a bit of a high at some point, and yeah, we've only just had the halving, what was it, like 3 months ago, there or thereabouts, so let's see what happens. Hopefully it would be nice if it repeats itself and we get plenty more of that. And then lastly, just another one that's actually from yesterday, which I'm annoyed about. The X page must not have refreshed and they must not have posted today's. However, again, an interesting chart. I've just found this X page, like I said, so I'm really going to just start using it quite a lot now. It's Bitcoin chart bot, if anyone cares for it. But just cool to see how things look over the past, again, what's that, 13 years? So the prices of what Bitcoin has been. And yeah, it's exciting. Imagine being back here. The annoying thing is, well, I first heard about Bitcoin here. Imagine I bought some in 2013. That would have been nice, but I didn't. Anyway, there you go. That is the chart I wanted to show you. Hopefully you took something from that. But anyway, that's all I'm going to leave it on that chart. That's all I have time for today. Hopefully you have enjoyed this kind of impromptu coffee and crypto episode. It's been a while since I have blessed your screens, but I will be back multiple times per week, and I will be delivering some news. It is hard to bring news when the market is just boring, but I will do my very best. So some episodes might be longer than others, but we'll do our very best to get some info out there and even just be the voice of reason for everyone that needs it. Now, what's next for the channel? We do have a very, very exciting video coming soon. Deck is working on it, and it's probably the most bullish video that has been made since $16,000 Bitcoin many years ago. So that video performed really well. The market performed really well after that, as you will all know. So yeah, make sure you follow us on X. Make sure you subscribe to this channel as well if you haven't already. Turn on bell notifications, all that good stuff, because there is a very, very important video coming very soon. But also, Coffee and Crypto is coming back multiple times per week. So yeah, you're going to want to get back involved in crypto. You're going to want to send this to someone who's maybe shied away from the market, who needs to get back involved. Send them this video. Tell them that Don told them to send it. And we're back. Bitcoin is looking good. Crypto's looking good. Again, depending on how you look at it, technically on paper, does it look all that good? It's in the red. Well, no, but on a grander scale, bigger kind of picture, yeah, it's looking good. Of course, nothing in this video is financial advice. Please remember that. It's just my opinion. And yeah, that's all for today's video. I will see you very, very soon. Thanks for watching. See ya.